Mondays. Today is March 1st, 2020, and I'm here with the crew, live on set. It's been a crazy week here. As you guys already know, the markets, pretty much plummeted last week and broke some records, the largest drop, in the history of the market in such short time. It's just crazy. And everybody knows the culprit is the coronavirus, basically. So coronavirus is still at our throats right now. And if you guys can remember, just a couple of weeks ago, a week or 2 weeks ago, right? The markets was just like untamed, constantly going. And so people would be like, oh, this thing can go on forever and go on forever. And then you have the plunge protection team to come in. You got the feds and all of them injecting all this liquidity in the markets. There's no foundation. There's no fundamentals to keep this stuff going up where it's at. So that's why I've been telling you guys, tread softly. Now, over the past few weeks, if y'all been seeing the setups that I've been calling, there's a lot of money that was made in those setups. The setups that we call out in silver, the setups we call out in gold, all that stuff built up to where we are now. That's why I was telling you, I was like, man, who's buying at these highs? Y'all remember that, right? Right? Everybody see all the news. Everybody's going crazy about these crazy companies, fake moves in the market. And yeah, you can make money off of fake moves. That's just the reality. But then you get a lot of people that come in and, they think they're experts because they made some money off of a fluke in the market. And it's just weird. It's not how it works. So yeah, you get those one-offs, you get the outliers that happen. But that's why we try to pay, close attention to the data, the technicals and the fundamentals all together and put it all together. So right now, the markets, the futures you guys can see right now is down, still continuation to be down. Let me actually just pull up the arrows here. So this was there we go. All right. So you guys can see, the market came up, hit this ceiling here, right? So the ceiling is there with the Fibonacci levels. And then we get the crack. Boom. All right. All the gains for the whole 2020. If you're somebody who don't even understand what we're doing, if you're just buying and holding stuff like, people be trying to tell you on the news, Jim Cramer and these guys say you to buy and hold. Now you're losing money, right? So, this is what we do, as traders, we're able to, time the markets basically. And so this is real interesting, seeing where we are right now. But before I actually get into all of that, let me actually take you guys to some macro information here real quick. You guys already know we covered the yield curve. It's going to make sense. And I'm going to try to get through as quickly as possible. Bingo. All right. That's right. Winter finally came. That's right, Topaz. So you guys, anybody know what this is? Of course you guys know what this is. This is the handy dandy yield curve. You hear everybody and their mama talking about it, but nobody ever taught you about it, except for we taught here at Wallstreet Jackboyz, right? So, and then this is the yield curve, and it's hard for you to even get a hands on this here, but I actually built this one. And so you guys can actually interact with this. It's on the website and everything also. Let's see if it will allow me to manipulate here. Okay. So with this yield curve, all right. So the yield curve is stupidly inverted. Okay. This is as of Friday. All right. So just remember, bond yields, when investors are scared, they buy bonds and gold. Okay. So those are like some safe havens, right? So when they buy the bonds, the price bids up, it goes up, but the yield goes down. So the steeper the drop in the yields, that means they're buying, they're scared. And you guys remember a week ago, 2 weeks ago, this was nowhere near what it is now. It's been inverted, but it hasn't been this deep, all right? So just remember that the Feds, let me go with red here. Feds control the front end of this thing, right? So the short-term rates, they control that. They can manipulate this, all right? So you see the Feds manipulating this, all right? And then the markets is, this on the back end side, all right? So when you see the Feds cutting interest rates, raising interest rates, this is what they're manipulating. All right. Yes, that's exactly what it is. It's manipulation. All right. So they manipulate that to keep it down. They got it artificially suppressed at these levels here. OK. And just to back it up a tad bit, the yield curve, for those that don't know, is supposed to look like this. And that's a healthy economy. When the yield curve inverts, I don't know if y'all can read that. But yeah, so this is what a healthy yield curve looks like. Short term, it means you're lending the money. Short term, you make a small amount of money. Longer term, you make more money. All right. That's the way it's supposed to work. When it doesn't play out like that, then you have an inversion. That means that we have some fundamental, deep issues in the system itself. You guys know the Fed's have been cutting rates, trying to save this economy. And the coronavirus may be the bullet here to put this thing to rest. All right, we got the longest bull market in history. So yes, it is technically time for us to go into a recession, but recessions don't just happen just because of the time. It's because of the debt that's in the system. Okay. And then the confidence in the markets also. So combination of those things. But anyhow, what we pay attention to is the 3-month, 10-year. All right. That's the most thing that we pay attention to. And so you guys will see when they cross over, that's the inversion. All right. So because it's lower. So you make more money if you lend the government your money for 3 months, you make 1.2 versus you lending your money for 10 years. Who knows if the government going to be around, right? You're going to lend your money and make 1.13? No, you want to make the 1.2. So that's what you go for, right? So that's the way this thing kind of works. The back end is still intact. All right. Once it comes down, it's going to come down, but it's still intact right now. But if you see, it's almost at these levels. So it's definitely weighing in. So there's been talks. I just want to say this because there's been talks about the Fed's consensus in the markets that they're going to cut rates. This is all they have. All right. This is all they have. This is where we get to zero. Okay. This is really not much. Let me actually dial out so you can see what we're talking about here. That's the daily yield curve. You guys know I update that, constantly. I man all the data, update that so you guys can see what it is, right? This right here is the spreads. So this is another way that I like to look at. So I have two different views that I look at this economic data. All right. So again, we got the yield curve in here, right? When the gray line crosses over the blue line, that's an inversion. All right. We wrote the article. Everybody, mama talked about it. Plunge protection team came in, try to fix it. It's all fake. And everybody started buying everything up. Market hitting all these new highs. Then you get this. Okay. So now we're back inverted and it's steepening. It's coming down. That is not good. Really, really not good. And let me actually just show you guys. And again, this chart is on the website. You guys can interact with it. You can, manipulate some of the data to whatever research that you want to do. So you do have the ability to do that. What I want to do is actually take us out to, let's go 33 years out in the past. So you guys who are already members, you already know how this works. This is the recession. So people don't understand how this works when the yields invert. All right, we get that yield curve inversion, recession. All right, that was recession. Recession. That's the Great Recession, okay? And you see, basically, the interest rates are at zero, okay? So this is how the economy got together under Obama because the Feds kept this down at zero the whole time. Now, they went up when Trump came in, but now he got them back in control, I guess, because they're doing what he needs for them to do, and they bring this thing back down, all right? So, but whenever you get these peaks at the top, we go into a recession every time. This is the most accurate indicator there is, okay? It's the yield curve. And so we've been seeing this. We called this out last year. You guys already know. They try to fake us out right here, right? And now you're getting the move coming back. So it gets kind of volatile in this area, but you already know where we're going at. So where we going at? Zero. Right here. So that's where they're going to go to try to save the economy, okay? I don't know how interest rates is going to save the economy from this health scare, this coronavirus thing. You guys let me know if you figure that out. I don't think it's going to happen. It seems as if, we're in panic mode. I really don't know too much about it. It's just like, it's a lot of panicking right now. I don't know if they're just overly pushing this thing down just to try to force the Fed's hands to, bring these rates down. Because Trump, he does want the rates to be cheaper so that, I guess he can boom the economy more. But the economy is not working out the way that it should. So we get a lot of extremes. As you guys already know, we got the Democrats that they're running right now. I think Pete Buttigieg just freaking bounced out, and have Biden that's one. So again, I told you guys before it's going to come down between Bernie and I thought it was going to be Bernie and Bloomberg. I don't know. Biden's coming out now, so we'll kind of see how it plays out. But at the end of the day, I'm telling you guys, I believe that Bernie is going to win, and that is going to make this whole situation a whole lot more volatile than what, a lot of, my Republican friends believe. But this is really going to be very volatile when you get Trump versus Bernie. That's going to be the matchup. They want Biden to make it, and unless they rob Bernie for somehow, our reason, they have Biden. But I think that Bernie actually has a chance, although my Republican friends don't believe so. He does have a chance, a strong chance, especially if we go into a recession before the election. Now, that is really not going to be good. Now, on the save face for Trump, at least the catalyst that they can blame it on is the coronavirus. So you can't necessarily just say, oh, it was Trump. It's going to be like, oh, it was the coronavirus. Europe is falling apart right now. China's falling apart. And then that's going to bleed over into America. So he still might win, right? More than likely, Trump is more than likely going to win, for those that don't know. All right. But if they go into a recession before then, Bernie has a strong chance of winning at that level. So just keep that in mind, because that political turmoil is going to rock the markets. The markets is going to be lots of volatility. I told you guys that last week, actually, we talked about the volatility. So let me actually drop this down here real quick. Get this out the way. And let's take a look here at, I know we got the ES up right real quick, but let me just pull up the VIX. This is the fear indicator. All right. Wow. I'm surprised y'all ain't dropping emojis out there. When you see the VIX look like that, that's a lot of wows and pops and, emoticons that's supposed to be popping. When you see those numbers like that, that is fear, like we haven't seen in a very, very long time. All right. I'm going to kick back on a weekly chart so you guys can see the weekly chart here. Okay. So I've been, keeping eyes on this. We've been tracking this every game plan Sunday. Y'all know I've been showing you where we at. My Fibonacci levels have held here. All right. We told you where the floors were at. We know that we were in a squeeze. For those who don't know, one of our best setups here, and the squeeze is firing long. It's just fired long. We have buy triggers that told us to get in, right? And I told you guys last week that when this thing pops, because the setup, the technicals tell me it's gonna pop. I do not want it to pop. I don't want it because this is gonna be detrimental on the markets, right? So I don't want that to happen. But I gotta call it like I see it. The technicals is telling you that's what it is. So that's what we're gonna do. We're gonna play it that way. All right. So, but if you guys can see 50 way back here, all right, we've blown through every other peak in this VIX. Here we go again at the 50. That's crazy. And if you look at that topaz, where you at, topaz or Ron? Do you see a pattern on that? I'm just not actually looking at that. What they look like to y'all? That look like a straight up double bottom. I don't know if y'all see that or not, but that look like a double bottom. It's just right there, clear as day, kind of. So anyhow, but I want to show you that, but I'm also taking a step further back. All right. So this is a monthly chart. So this is larger time frames. You guys can see the years down here at the bottom. 2008. Maybe you can pull that up. This is the Great Recession that we had. All right. So the Great Recession is that time. But anytime you see the VIX, the fear indicator pops, I mean the markets are selling off. Guess where we are? That's where you are, right there. That's not good. Okay. The question right now that everybody wants to know and trying to figure out, all the quants are trying to reconfigure their algos and all of that, right? Is this going to come back down, or do we move into this recession move? Okay. It's very possible that we can actually go into this mode. I'm gonna show you why, just looking at the technicals alone. All right. Not talking about stories and all this stuff, just looking at the technicals. All right. And this is a monthly chart, so this is longer time frames, but it takes time for this to come out. It's not like tomorrow. I don't want anybody panicking and nothing like that. But you do need to, get in preparation. All right, so we'll show you this. This yellow line. You guys see that yellow line? Let me just draw it over. All right, that line is important. All right, that's a 200 moving average, right? This is one of the tools that we use. Teach it in the class, so you'll learn how to use all of that. If you haven't signed up, make sure you sign up. So when the VIX, get above that line, you're in trouble. It's more than likely going to move higher, kind of like how it did back here, right? And, it peaks up when it get up above that line. And once it's under the line, then you're pretty good. The markets normally will make them move higher, right? Especially when you hit those lows, that's good. And it makes these peaks, but as you see, those are candle wicks. Those are not the full candle. They snap up and then they come back down. That's just like one day of volatility. We're seeing sustained volatility, sustained selling pressure on the markets. And that's not good because I told you about that yellow line. Well, we're actually getting above that line. So that means that we definitely have, high probability of going higher. So I just want to actually just take you guys, take a look at that because this is nothing to be playing around with. It is really important. So here we go on a daily chart. Okay, this thing is definitely only out there, but it still can make some more room up and knock out those other highs. So at 49, 48 up here, this thing can still move higher. So when the markets is like this, you kind of want to stay away, all right? Unless you plan short to the short side. But the short side is going to be kind of dangerous to play right now because you should have been shorting this past week. Because of all the sell-offs coming in this week, we're going to get the dip buyers. They're going to try to come in and they may get crushed. I really don't know, but I don't see anything fundamentally that says that this is the time that we need to get in. So that's going to take you back. I'm going to take you back to this S&P 500. What's up, Terry? I see you, my man. That took a long time for that to clear. Got a lot of stuff running on my systems here. Let's see if I can shut some things down real quick. We don't like the lag. All right. So here we go. Yeah, that's right. As Topaz says, it caught the knife. It catch the knife. So taking a look at the S&P 500, I'm going to take you guys back a little bit. Let's just take a look at the weekly, okay? Now, actually, let me start at the daily here real quick because my Fibonacci levels, we got some good levels here, actually. All right, so I just took from this swing low to the swing high, right? And we have these levels, right? So this is a floor here. This is another floor that we breached, okay? The other lines at the top, those are on bigger time frames, so we'll talk about that later. But right now, we got that breach. You look at that red candlestick, it snapped, and then it came back up, okay? So that lets me know that my Fibonacci levels are working, all right? Because buyers are buying at my levels on my Fibonacci, okay? So it's behaving to that. Right now, live as we speak, is dropping. So we see it came down, it snapped up, and now we see it drop here. We got to see how it's going to play out. Right now, the markets is down, the S&P 500 down 70 points right now. But this thing could, come back down here to test that low again, test that floor. So ideally, what we want to see this happen this week is we kind of want to see this thing chop in this way. It's kind of like forms like this bear flag, right? On a daily chart, we're at the oversold territories. So this is what I mean that we may get some dip buyers to come back in that try to revive this thing, but they may get their heads cracked. Because I'm going to tell you why. Now we go back, bigger time frame, weekly, okay? So you guys will see this on a weekly time frame. I think the last time I had a sell trigger was here, and it did come into fruition. Friday, got a sell trigger. Today, right now, we got a sell trigger. The only problem is that it's at the floor. So that's hard. You don't want to get in at the floor. Normally you sell off when you're at a ceiling. So when you're at a floor level, you need to breach the floor before you get in to the short side. So this is why it's going to be tricky because we're going to have a lot of that going on. People still panicking, but then you got people that believe in that this is going to be the floor and they're going to try to buy the dip. So again, I believe this is going to be choppy, but when I take a look at this weekly chart, I can't ignore the fact that there's a sell trigger that's in there. I do see the floor here, but we don't know if that floor is going to hold. That floor it also coincides with my Fibonacci. It's right here at that level. So one or two things can happen this week, basically, is that we either chop around to the side, which is a good case for the markets. That means that the markets is being relieved, or we snap and we come down to the 200 right here at this level, right? That's about 2,600. That's a lot of freaking points. That's 300 points. That's a lot of points for the S&P, all right? Not that I want to see that, but that's what the technicals are showing. Also, further on the weekly, all right? After that sell trigger there, momentum is shifting down on stochastics. You can see this. The momentum is shifting. The trend is also shifting. So when I have a lot of, signals that's pointing to the south, longer term time frames on a weekly, of course. But this is where we're more than likely going to head if this thing don't get, situated. So I'm aiming to the short side because of that. All right. Now another thing is that let me just pull up the other big boys. Go to Russell, same situation as you guys can see on the Russell. We got a sell trigger here. All right. Right now, it's sell trigger just forming right now. All right. We have bumped up at those tops, caught the knife. All right. The trend and the momentum is shifting down. So we'll see. Will we chop to the side or we fall further? That's the question of this week. So you guys want to play it conservative. Same thing. I'll take one look at the NASDAQ. The NASDAQ, you definitely want to see this recover. This is going to be a saving grace. So this NASDAQ recovering, the markets will probably move higher. This is the big boys, okay? Your Facebook, your Microsoft, your Apple, all of them pretty much in here. And so we want to see, we'll watch that, see how they do. But they definitely dropped big time. Yeah, you can see that. It's right here at the 200. So we want to see here, and again, this is the daily chart. We want to see if it's going to consolidate here at the floor. And then, if it consolidates here at the floor, then you may get a buy. So the dip buyers, I believe, are going to come in here at the NASDAQ side, tech stocks. All right. So, and again, with all of that being said, there's going to be a lot of volatility. So swing trading is going to be difficult this week because of the volatility, the conflicting signals. Day trading is going to be probably the most profitable thing to do. Catch a move today, get out today. Carrying moves overnight, it's going to be tricky this week. Monday, wait it out. No need to enter into no new trades tomorrow. Wait it out to see how this thing is going to size up. Tuesday, at the end of the day, the PM session, that's when you kind of want to set your target, see how this thing, shapes up. So Tuesday after 2 o'clock, that's when you want to kind of look at some situations, in the market from that. Also, let me cover gold real quick. So it's another, conflicting information here, right? When you're looking at the charts, gold normally plays opposite to stocks. However, you guys did get the sell off in gold, right? Right along with stocks. That wasn't as big as stocks though, okay? What you're seeing is profit taken in gold. Gold hit its targets. So the setups that we call in the past 2 weeks, we call the plays, we had the targets, but you already made your money off of those trades. Gold right now is, again, coming down, which is good. So we want to see gold come down. It's right here at the 50. Kind of want to see if it's going to consolidate here. It may come down even more if the market rallies to the 100. I believe it'll hold somewhere around here, worst case scenario. Up here, kind of believing that it's going to consolidate here. And before it catches this next move higher. All right. So, you don't want to, right now, I don't see any move that says buy gold right now. So even though the markets may continue to go down, the move in gold has already passed as far as the technicals go. It could go higher, but I don't see it in the technicals. So I just want to give you a heads up on that. And a lot of what was happening is that, you have profit taken in gold, but a lot of the money has been jumping into bonds. So let's pull up bonds. All right, so this is the TLT. This is the bond ETF. So when you play in bonds, this is the ticker that you want to play. All right, and bonds is taking off. It's in an overbought territory, but it's continuing to move higher, right? And investors, they're buying up a lot of bonds right now. They're already predicting, they're forecasting, I should say, that the Fed is going to be cutting rates. There's been talks about the Fed's doing an emergency cut. All right. So I believe we got about 2 weeks for the Fed meeting where they're going to announce rates. But they're talking about doing an emergency cut, this week. So if the markets, right now they're looking bad, 200 points on the NASDAQ down right now. This is not even Monday. So I don't know how, this is going to shape out. It doesn't look good. But if this continues, the Feds, they're going to cut rates, before they even had the meeting. The emergency rate cut is coming. And then they're going to cut again at the meeting in 2 weeks. So investors they're running, they hitting, they hitting this thing, buying up the bonds because equities is in a tough spot, and the trend is now shifting over. So it's not good on the stock market side. So they're trying to make their money in bonds. As you see, the prices going up. We talked about the yield curve earlier. Yield curve is coming down. It's inverting. So those are pretty much the main themes that I wanted to cover. And I know we're kind of crushed on time. So I'll take some things from you guys. I'll take a look at 3 stocks that you guys have, and then we'll go into the second half of the game plan Sunday session, where I'm gonna give you guys the new Wall Street Jackboyz platform walkthrough. You got to check it out. I'm gonna show you guys. You're gonna love it. Trust and believe me. Let me actually knock out Square, because I believe it was Wesley, our dear good friend who's out in South Africa. He did actually reach out to me and told me to cover this, and I don't even remember. Square is SQ. Let's see. All right, so it's been a little while since I charted this, obviously. Let me take off my longer term trends here. But just taking a look at the chart itself, we can see, I'm gonna leave that line there because it's behaving there. But as we can see, the stock is actually moving up. So that's good. Short term, let me take that swing high to this low. Got a target to about the $90 side. But then I also want to go further and take this target to this low. And it's right there, close to the same spot. Come on, Thinkorswim, start to work for me. There we go. All right. So it's right there. We get a confluence right here at that level. So right around the $90 mark to the upside. Got a buy trigger here. See, we had a buy trigger there. Again, buy trigger that's there also. So this thing actually plays right. I mean, you got an upside target here. You can get in there, ride it to the $90 mark. Again, because the shape that the markets are in, I'm not looking at to playing anything long right now, but I do like this to the long side as far as what the technical shows. So if you're looking for some long exposure, shout out to Wes. He did call this out. So if the markets does recover, then, this right here looks in better shape than a lot of other, names in the markets right now. CLX, Clorox. Man, washing clothes, B. So, this is really, really bad. You look at it, very violent sell-off. That's a knife right there. Volatility is really hot on this stock. We got 100 volatility that's there. It hit that peak, sold out. This would have been a really, really good one to have been in on Thursday to the short side. After seeing it tag there. And that move down there, that was a lot of money that was made. I mean, it actually tested the 100. So, more to the short side on this. Again, you see everything is shifting down. Trend is down. Momentum is down. Trigger says to go down. The question is, where do we begin tomorrow? All right. Where do we begin tomorrow? Where are we at now? Let's see. Where are we? Oh, 159.60. All right. So 159.60, as you guys can see right here. So it's going to try to recover a little bit. So it's probably start about right here. Let's start about right here. You guys see how it's going to play to the short side. It's going to be tricky, though. So just keep that in mind. But, yeah, if anything, short side. You don't want to play this to the north side. Right now, remember the volatility that's coming in the markets right now. A lot of people are going to get chopped up in this. All right. What else we got? Consumer staple. Yeah, I believe that it is like Procter Gamble and all of that. But the sectors, all the sectors are pretty, they're in rough shape. Let's take a look at LK. All right, and this is Luckin Coffee. What you looking to do with this one here, Ron? I mean, you looking like a bear flag up here. So yeah, I mean, I don't know. I don't really trust this one, but it might not. It might break out of this. It may turn into a double bottom, right? This may turn into a double bottom. We can come up. I don't have enough information on that just yet. We have to see how that plays out. You think about shorting that one too? I don't know, Ron. This is a tough one. This is a tough one. I mean, it's a, you know, it's in an uptrend. I mean, it's still, you know, it's up. You know what I mean? The question is, do we break here? You know, is that a bear flag? So if you play into the short side, I can see why, right? Because that could be a bear flag. But you know, in this volatility, they can shake us out. You know, them algos, man, and they turn that thing into a double bottom. So this is tricky. We're in a tough spot right now. Excuse me. So yeah, let's get some more confirmation on that, and to see. You know, I don't have any triggers on anything either. You know, got a little squeeze. Momentum's trend is down, but momentum is trying to shift up. So it's a little conflicting here for me on that. All right, so cool. So with that being said, I hope you guys, you know, can take that information and do something with it. So we're definitely gonna be watching, you know, the markets for tomorrow. All right. So away from all the nerd stuff, let's get into some of the fun stuff. Okay, we're gonna actually go into what is the brand new Wall Street Jackboyz. All right, I'm gonna actually